Right now, while you're watching this explainer, someone, somewhere, just made more money sleeping than you'll make this entire month working. And you know what? That's not an insult. It's not just blind luck, either. It's a system. And once you pull back the curtain on this hidden structural engine of wealth creation, you really can't unsee it. We're going to break down exactly why most people are unintentionally working against their own wealth every single day. So let's dive right into that jarring reality. The truth is, wealth isn't just about working harder. It's a specific system of direction. Money, once it crosses a certain threshold, completely stops requiring your time to grow. It just starts working on its own. To understand this, we first need to look at the wealth gap reality. Here is a number that should absolutely bother you. The bottom 50% of the world's population, combined, owns less than 2% of global wealth. Half the planet is left with almost nothing. And the crazy part? Studies on time use consistently show that lower-income workers log incredibly long hours. So raw effort clearly isn't the deciding factor here. Because at the other end of the spectrum, the wealthiest 1% owns nearly half of all global wealth. That gap isn't just sitting there, it's accelerating into an absolute canyon. This proves the answer isn't effort. It's about hitting that threshold where your money works for you. So who actually gets to that threshold? And why do so many people never cross it? Well, it starts with the psychology of scarcity. To truly understand the gap, we have to look inside the mind. And the crucial point here is that being stuck in a scarcity mindset isn't a character flaw, not at all. It's a forced biological survival mechanism. When money is tight, your brain literally narrows its focus to right now. Rent, groceries, just making it through the week. It physically prevents long-term planning because you're entirely consumed by immediate survival. Economist Sendel Mullainathan frames this perfectly. He calls it a bandwidth tax. Basically, poverty literally taxes your cognitive capacity. Studies show that financial stress reduces your effective decision-making ability by the equivalent of losing an entire night's sleep. Meanwhile, wealth creates the exact opposite loop. Financial security frees up mental space to think in decades, right? To take calculated risks, to wait. The wealthy can afford the most profitable asset on earth, patience. Which brings us to the magic of compounding. Let's pivot to the math and uncover the hidden engine nobody ever bothers to explain in school. You've probably heard that Albert Einstein allegedly called compounding the eighth wonder of the world. True or not, the math absolutely backs it up. Compounding is the exact mechanism where money makes money way faster than labor ever could. Think about it like this. Capital deployed once works continuously. If you take a single $10,000 investment at a 7% average return, it doesn't just grow by $700 a year. Let it sit for 30 years, and it turns into over $76,000. And that's without adding another single dollar to it. It just builds on itself. Let's compare two different people to see how wild this really is. Investor A starts investing $5,000 a year at age 25. Investor B does the exact same thing, but waits until age 35. By the time they both hit 65, the early starter wins massively. They have nearly double what Investor B has, not because they put in way more cash, but simply because an investment trades time itself for dollars, and time never gets tired. This fuels the next vital step, building passive income streams. This is where the wealth gap truly turns into a canyon, building income streams that don't need you to physically be there. Statistically, the middle class keeps most of its net worth tied up in one place, home equity. That's an asset that's illiquid, slow-growing, and honestly often over-leveraged. The wealthy, by contrast, relentlessly diversify into productive assets. Dividend stocks, rental real estate, royalties, business equity. They own the machine instead of operating it, acquiring assets that pay them whether they show up to work or not. That's not cheating the system, it's just understanding it. Of course, there are common wealth-building mistakes that keep people trapped. Now for the uncomfortable part, because some of this gap is purely behavioral. These 4 common traps are absolutely deadly. First, lifestyle inflation. Every raise gets absorbed by a nicer car or bigger apartment before a single dollar reaches an investment account. Second, treating debt as normal for depreciating things like electronics, while wealth builders reserve debt exclusively for appreciating assets. Third, avoiding the market out of fear. Cash sitting still doesn't just fail to grow, inflation quietly shrinks it every single year. And finally, having no system, just saving whatever happens to be left at the end of the month. These aren't about intelligence, they're just bad habits ingrained in us. So let's flip the script and look at the habits of the wealthy. How do we fix this? Here is the actionable blueprint. 1. Pay yourself first. Your money goes to investments before a single dollar touches your checking account. 2. Think in decades. Remember, compounding rewards the patient, not the clever. 3. Buy assets, not appearances. And 4. Keep learning about markets and taxes, because the rules always favor those who understand them. The ultimate mindset shift really comes down to this. A $40,000 car depreciates the second you drive it off the lot, mostly just to impress strangers. But a $40,000 index fund position, that quietly compounds and can literally change the financial trajectory of your entire family tree. It is the stark difference between looking rich and actually being wealthy. The main takeaway from this explainer is that the rich do not get richer by accident. They get richer by design. Sure, it's a design most people were simply never shown, but it is absolutely not locked behind a velvet rope. Time, patience, and compounding do not check your bank balance before they start working for you. They're available right now. So now that you've seen the system and you know how to build your own engine, you have a choice. You can keep trading your time for dollars, or you can start trading your dollars for time. Which side of the wealth gap are you going to build on tomorrow?